Hello traders and investors, welcome back to the Trend Trader channel. In this video we are going to be looking at some of the most anticipated earnings that will be released in the upcoming week. You can find this information on Earnings Whisper Twitter account. As you can see there, that is where you're going to find all this information. The way that these companies are structured is that they will be releasing these earnings on specific days, and then some of these companies will report their earnings before the market open, and some will report their earnings after the market opens. After the market closes. This is not the comprehensive list of all the companies that will be coming up with their earnings. As the name says, it is the most anticipated earnings. Based on this list, we're going to be looking at a couple of companies that interest us, either from a technical perspective or from some bits and pieces of information that we may have of the specific company. Before we start, I would like to ask those that haven't subscribed to please consider subscribing. And those, if you find value in this video, please make sure that you smash that like button, and also feel free to share this video. If you have any comments or suggestions, please leave them in the comment section. As you can see from this list, there are a couple of interesting companies such as Walmart, Home Depot, Advanced Auto Part, NVIDIA, Target, Lowe's. We also see that there is Tencent and Alibaba Group. These are Chinese stock. We saw in the past when the CCP Congress was happening, Alibaba Group and Tencent were affected by the politics that is happening in China. So if you have exposure to these companies, you shouldn't be surprised if something happens in China. From our side, we prefer to ignore some of the stocks that are only available in China. That is not to say that there are no trading or investing opportunities that can arise from these companies. So as an investor, you need to make your own informed decision. Let us go back to the chart. The first company that we want to talk about is Walmart. Let us look at the chart of Walmart. Remember that in the US, like globally, a lot of countries are experiencing recession. So Walmart is one of those companies that have been affected by recession in the past. So that previously when they came out with their earnings, their share price, it took a big knock there, where we saw the share price drop from somewhere around $150 per share to the low of about $117 per share. Since then, the share price has attempted a recovery. We saw in the past week the share price crossed our area of interest. At this moment, the share price is moving up, but depending on the economic state in the US and other issues, we don't know where the share price is going to be. But we wouldn't be surprised if the share price can push back all the way to 157. That is based on how the earnings of that company, Walmart, are going to be. So we're not predicting anything. We're just looking at price action and trying to see what we can expect. Recently, we released a video where we're talking about companies that you can buy in the US so that you can create a monthly dividend paying income. In those companies, we also mentioned Home Depot. So at this moment, we like a Home Depot price action. What we see something that looks like a double bottom in here. So we are waiting to see for Home Depot to cross above this neckline somewhere around $320 per share. Once Home Depot break this level, then we can expect the share price to continue to rise. Again, that is also dependent on the kind of result that Home Depot is going to come with. But from a technical perspective, we like this double bottom that is forming here, and the fact that the share price is trading above a key moving average. So for us, this is a bullish signal. You can see that last week the stock also traded with above average volume. For that reason, we like Home Depot, and we are considering adding Home Depot into our portfolio. Anything is possible. We always have a stop loss, so we can set a stop loss just below this low here, somewhere around $275 per share, and then we see how far the share price can go up. At the moment, there are plenty of levels that could act as a resistance level, just as we see here around $370 per share, all the way going back to that previous high of somewhere around $410 per share. So we are interested in Home Depot. We want to see what is going to happen with this particular company. Another retailer that is coming up with result is Target Corporation. Similar to Home Depot, we also see that it has formed a series of higher highs and higher lows. You can see this this low is higher than the previous low, which is a good characteristics of a change in trend. We also note that the share price broke above this level at somewhere now it's trading at $173 per share, and also we see that the volume, it was above average volume. So if you are a short-term trader, you can consider taking a position here with a stop somewhere around $150 per share, but keep in mind that there's this overhead resistance somewhere around 190 per share. If we manage to break above this level, then we can then expect the share price to go as up as $240 per share. We are not predicting anything, we are simply looking at the price of least resistance. Always ensure that you make an informed decision, and you also take other factors into consideration, factors such as fundamental analysis of the stock. Then we also, in that video where we're talking about the stocks that you can use to get a monthly dividend, we mentioned Lowe's companies, which is also another retail here. We mentioned that the retail, it formed something that looked like a bullish pattern, a bullish flag, and then we saw that the price breaking above the level of the flag, and it also has a confluence because it was breaking above this moving average. So ideally, if you want to buy at the current level where it is, you need to have a stop loss below this level. That is, if you're a long-term investor, preferably you wouldn't want to have a stop loss that is greater than 8% from the enterprise. And then once again, based on what we can expect to see from this result, now you can have a buy stop order somewhere around $210 per share, so that if the share price break above this level, then you're getting a breakout, then you can easily set a nice low risk stop loss, or you can just see here, place a stop loss just below $200 per share. Again, this is a potential resistance level, but also the previous high is another potential resistance level in there. So Home Depot, Target, and Lowe's companies, they have decent trading opportunities. Also, you can see that here we have a lower high, which is higher compared to the previous low. This is a sign of a change in trend. It can turn into an uptrend. And also note that the volume, even though it's still below what was the average of the past 10 weeks, but the volume of the previous week is encouraging that something is happening with this particular company. For some people, they've been paying attention to some semiconductors. Some semiconductors have been hit hard in the past. One of the semiconductors is NVIDIA Corporation. But as you can see, NVIDIA Corporation, it is trying to come back to reclaim, to trade above this key moving average. At this moment, for us, it is better to wait, especially to see the kind of result that are coming, because if this stock come up with negative result, the share price can easily pull back. But if the company comes out with positive result, then we can see the share price breaking above this level. At this moment, we're just sitting on the side. We want to see what is going to happen with this company before we make any buy or sell decision. We are simply sitting on the side. And then, like we mentioned, that there is Tencent and Alibaba, which are also coming with their earnings. The reason why we're interested in Tencent is because we also have interest in Naspers. If this company comes with positive result, that can have an impact on Naspers. But as things stand, we see that Tencent is nicely on an uptrend. We mentioned that it is a Chinese tech stock. Besides the performance of the company, there is also political risk that is usually mentioned when it comes to Chinese stock. So whatever you do keep that in mind. At the moment, we are bearish on Tencent, even though we have a long position on Naspers. We treat them as two different companies. We also spoke about Alibaba, which is also another Chinese company that is going to come up with the result. Again, Alibaba, like Tencent, is also on a downtrend. At the moment, we don't have an interest in this stock. So we are waiting to see if the stock can come back and attempt to trade above this level. As things stand, we don't have interest in this particular company. And then finally, let us look at Gap. We know that this company has been on the news recently, especially since they cut ties with the rapper Kanye West, but we are not interested in that kind of thing. In this video, we are interested in terms of price action. Now, when you look at Gap Incorporation, we can see that it has been on a downtrend, like many companies, whether they are listed in the Johannesburg Security Exchange or New York Security Exchange. And then we see here from July, the stock started to trade sideways, and then it attempted to come back to reclaim this level, but it failed coming back to this level, creating something that looks like a double bottom. We saw in the past 3 weeks the share price pushed all the way, coming back to trade above $10 per share. Currently it is trading at $12.28. The reason why we like this stock is because if you buy at this moment, you can set a stop loss just somewhere around $10 per share. But some people, they have a belief that it's better to set a stop loss far away from a full number. By a full number, we mean something like $10 or $11 or $12. So you can set a stop loss, maybe say at $9.50, $9.80, so that it is not easily triggered. Depending on where the company is going to move, this is a low risk entry. We wouldn't be surprised if the share price continue to push further up. It's also a good opportunity to buy this company while the share price is trying to come out of its bear market. That means that you can buy more shares at a low risk. If the company pays dividends, then you are in a position to receive plenty of dividends in future, but you would have paid a low price for this particular company. So in all the companies that we have covered in this video, this is one stock that interests us the most, based on price action, not based on other factors. What we're expecting, or what we would like to see, is that the stock come up with a positive result, which can act as a catalyst to propel the share price higher. So that's it that we wanted to cover today. Remember, this list is by no means comprehensive. You can find all the companies that will be coming with the earnings, but these are some of the most anticipated earnings, and we simply covered those stocks that look attractive in terms of price action. So that's it. If you found value in this video, please consider subscribing if you haven't subscribed, and please make sure that you smash the like button. We'll see you in the next video.